Well, good morning, everyone. Thomas Montgomery here. We get together with our distribution partners most weekday mornings at this time, 8 o'clock Central, to talk about strategies, tips, techniques, share success stories, and support each of you. If everything's going well, you should see my secondary screen displayed here in the Zoom, and you should see the first page, the content page, the title page of our presentation today. This is a brief PowerPoint that will provide each of you an editable format that you could use if you would like to educate small businesses. Obviously, what you and I do is help people become credible so they qualify for funding. And we talk a lot about the credit and funding program and how that helps the individual business owners in terms of their 3 C's, their credit, their collateral, and their capacity. And that's certainly true. But we shouldn't overlook the fact that the credibility of the business also makes a difference if we're going after business funding. So today's presentation, we're going to talk about credibility factors of the business, not of the business owner, but of the business. I think this is a very relevant and timely topic because from my experience, and yours may be different, a lot of small business owners don't understand what it takes to become credible. They may want money, they may need money, but in many cases, their business lacks the credibility needed to be approved for business funding. Now, that doesn't mean they couldn't qualify for consumer funding or personal funding. So let's go ahead and go through this. Now, I'm going to present it with side dialogue and interaction with you. This is not how I would present it to the end user. I'm using this as more of an instructional tool, more of a teaching opportunity, helping you, our branches, consider using this for financial literacy in your community. So here's the title page, and obviously you would be able to change this with your branch's content information. So throughout the PowerPoint right now, it's branded to us. When you're using it, it wouldn't be, it would be branded to you. And that's probably obvious. But let's go ahead and get started. So I'm going to kind of pretend I'm presenting this to an audience, but at the same time, we'll have side conversation that's relevant in helping you maybe better understand how to use it as a branch office. Make sense? Anytime you have any questions, comments, concerns, go ahead and type it into the Q&A. It's like a chat box of Zoom. So welcome, everyone. We're going to talk about 10 mistakes that will get your business denied for business funding, and also talk about some resources that's available. So without any further ado, let's go ahead and get started. Well, I think it's important to decide, why does this matter? Because your time's important. Frankly, my time's important. So why is it that we're going to spend the next few minutes together talking about this material? Well, it's important to understand that lenders and other types of credit issuers will often automatically decline a business based upon not meeting the approval standards. Therefore, since there is a formula that they're using, it would make a lot of sense for you to know what that formula is to the extent that you can and meet it. So that way you get approved automatically, because often if you don't meet their formula for approval, you'll be declined. So let's spend a few minutes today talking about the different elements that go into this formula for underwriting approval. I do forewarn you, as we go through this, it's important to have your business owner hat on. So often we work with entrepreneurs and they tend to see things through the lenses as a consumer, not as a business owner. So let's be sure that we're using our business mindset when we're talking about business funding, because the rules are different. For example, we need to focus on having a credible business. So that business looks credible for approval. So we're not talking about the business owner, we're talking about the business at this point today. Now, some people will have a false belief that if someone has a new business, that it can't be credible, that it can't have strong financials. And that's just simply not true. You and I could form a business today and it could look strong on paper in 24 hours. So please don't allow yourself to fall into that fallacy that new businesses can't look credible. So what we do realize is that the business's credibility, their collateral, the solvency, those are our key variables that impact will we be able to get access to business funding. We can't dismiss that. So what we've brought up so far is 2 points. Don't think that new businesses can't be credible, but also don't overlook the fact that the credibility of your business is going to make a difference in terms of getting business funding. So what does it mean? We need to work together to make sure that your business looks credible on paper. And of course, we're talking about legally and ethically, nothing gray, nothing fuzzy, but we need to look credible. Our business needs to look credible on paper to get funding. So that's what we're going to do. We're going to just spend the next few minutes together talking about what this means and some strategies to help small businesses be positioned for a successful capital raise. Now, as the note says at the bottom, this should never be like, oh, darn it, I don't have this, I'll never get business funding. It's exactly the opposite of that. We have received a grant. We are here to assist small businesses in becoming credible enough for funding. So that's why we're here. We're here today, not to sell you anything, but to educate you on what you need to know. And then if you happen to need assistance on any of this, we can certainly assist you with it. So let's go ahead and get into the 10 mistakes that commonly prevent small businesses from getting funded. Mistake number 1, business address. And this is mistake number 1 for a reason, because this is the first aspect that we should focus on is our business credible? So for those of you that are, and I'm kind of off script now, making a side note to you. If you're one of our branch offices, what you're doing is bringing clients into the credit and funding program. There's 4 elements for that, right? The agreement, the payment, the soft pull, and the PFS. We know that. That's not what we're talking about today. But what happens now after you have a client file set up? You complete that 1-page app and you submit that app to your funding coordinator, who's going to get funding offers for your client, right? We just talked about that yesterday. Well, on the top half of that app is business information. The bottom half is the business owner information. So quite frankly, those of you that are branches, once you have a client onboarded and you have that app filled out, it's going to be very easy for you to look at the top half of that app and determine, is this business credible for business funding? At that point, you have a very accurate understanding. And you will know regarding mistake number 1, is your client positioned well or not positioned well? Because on the top of that 1-page app that you should have now, if you don't have it, get with your funding coordinator and she'll provide it to you, because that's what we're going to be using for each of your clients. You'll know, do they have a business address or not? So that was a side note, but let's get back into the material. So mistake number 1 is business address. Well, what do we mean by that? Your business address needs to be a real brick and mortar building with a physical address. It's absolutely important that we have a true business address. What that means is, no, a home address doesn't do the trick. We can't call our back bedroom Suite B and call it a commercial address. We need a business address. Post office boxes don't work either. So don't fall into the trap of saying, oh, I'll just skip this step. I don't need a business address for my business to look credible for funding. It's not important. It is important. And that's why it's number 1 on our list today. Most lenders are going to check to verify your address to see if it is a commercial address, because every address is part of the U.S. Postal Service database that has it categorized. So if it's a mail center, they know that. If it's really a residential address, they know that. We're not going to game the system. We need a real business address for our business to look credible. Furthermore, we commonly see people make the mistake that they'll think they'll go get a virtual address. And virtual addresses typically don't work. Now, what do I mean by a virtual address? So it doesn't mean that you have to go to that address every day to work. But what we're talking about with the virtual addresses are typically those that are like a WeWork or Regus, where it's a shared address, where there's a bunch of different businesses that have the same suite number. That is not a unique address. And we, of course, need to make sure that the address matches at the federal level with the IRS, which you file when you get your EIN, which we'll talk about more in a minute, with the state when you form the entity, which we'll talk more about in a minute, and of course with your bank account. So it is important that addresses match, but we do need to make sure that it's a good, credible address. We are seeing increasingly banks like JP Morgan Chase and others, and even Dun & Bradstreet will just not accept virtual addresses anymore. One other consideration that I'd like you to be aware of when it comes to addresses is that your address matters. Now, what do I mean by that? Well, certainly some states have different tax codes than others, and there's a handful of states in the United States that don't tax businesses. So it might be smart to form a business in a state that doesn't charge taxes, of course. But above and beyond that, as the PowerPoint shows, there are some lenders that only loan in specific areas. There's quite a few lenders that don't lend nationally. They have targeted areas, either by state or by region, some even by county. So that is another reason we'd want to be thoughtful of where do we want our business address. So often, entrepreneurs take a rather passive approach and just say, well, my address has to be here where I'm at. But that's not the case. Your business could be formed anywhere in the United States. So, for example, on this point, many of you are familiar with the Chapman Fund, CHAPMAN Fund, Chapman Fund. Awesome source of capital. Does not come through a bank, does not come through a credit union. It's from a taxing authority. Well, to no surprise, if you're trying to get money through a taxing authority, then your business needs to be based in the geographic area of that taxing authority. Here's an analogy. Maybe it's helpful, maybe it's not. Tulsa, Oklahoma, for the longest time, would offer $9,000 for people like you and I to move there. They had a tax incentive to attract professionals like you and I. And if you and I would move to Tulsa, Oklahoma, they would literally give us $9,000 because they want more professionals moving to Tulsa. Well, here, what we're pointing out is that there are some tax-supported funding sources that want to start more businesses, and the Chapman Fund is one of those. All right, so that's mistake number one. Business address, it matters. We've talked about why and some other considerations. Anyone have questions on addresses before we move on? So a note, if you're one of our branches and you or someone on your team's presenting this, you could present it in person at workshops, libraries, chambers, what have you. You could teach it online via Zoom or what have you. But it's best practice to pause after each slide, after each of the mistakes, and get feedback. Now, depending upon how much time you have, will determine how quickly you have to move through it. But let's move on to mistake number two. Oh, and I guess it's mentioned here, I forgot. So we do, through our program, we'll provide a free business address that does provide access to the Chapman Fund. But move on. Mistake number two, entity selection. So we've covered address. Address matters. But now we need to think about how is our business formed. It is better to have a formal structure of a business than informal. So what do I mean by that? Can you get funding as a sole proprietorship? Yes, to some extreme, some extent, I should say. But in general, you can't get business funding unless you have a business, which kind of makes sense, right? So having a true business entity is better from a liability perspective as well, but also for accessing business funding. It just seems more legitimate. There's debt-based capital and equity-based capital, as we've talked about before. And in almost all cases, investors will prefer a C Corp. In general, it's best to form your entity in the same state as your business address. That's best practice. But conversely, as I mentioned a moment ago, your business does not have to be in the same state you reside in. It's perfectly normal to form a business in a different state than where you live. It's not a requirement. It's not a problem. Most smart people do that because there are some places that are better to start a business than others, as we talked about on the prior slide. So in fact, through our grant program, we'll actually pay for the Secretary of State filing fees to get your new business formed. Okay, so that's mistake number 2, making sure that we have an entity. So what's the mistake? Not having an entity. So how to cure that mistake is to have an entity other than a sole proprietorship if you want business funding. Mistake number 1 was on business addresses. The mistake is not having a good business address. How do you fix that? Have a good business address that met those criteria we've talked about. All right, moving on. Mistake number 3, business name mismatch. One of the most common reasons for funding applications being denied is the lender can't find your business online. So your business name should be exactly as what's listed online and with the Secretary of State. So it's very important that you use your exact business legal name. It's not unusual, and this kind of ties back to mistakes number 1 and 2. It's not unusual that lenders will come back and ask for some verification. So a simple example is a lease. We see commonly now for business loans, the lender will come back and say, give us a copy of your lease. So as I think you all know, we provide commercial addresses for clients that need it. So we have a true lease, a real lease. So we'll provide them the lease, and that's often what's needed for approval. And then also, as mentioned on the page here, like bank statements. The bank statement should have your business address on it. Names and addresses need to match. Hopefully that makes sense. And this isn't like real revolutionary information, but I can tell you it's frequently overlooked topics or issues that have a negative impact on small businesses being able to get approved for funding. That's why we're going through it. So you can teach about this, you can identify if your clients have these issues, and we can proactively address it. Okay, moving on. Also ensure that your business name matches to online listings. Mistake number 4, not being in good standing. So you want to make sure with your Secretary of State that you have all the necessary information that your company is in good standing with them. Make sure that it shows the company is active. In some states, you'll need to file annual reports. With this, if clients are using our startup funding package, then we're providing on number 1, a good commercial address that's in the geographic area for the Chapman Fund for that $250,000. We'll form the new entity so it's formed correctly. And of course, mistake number 3 won't be an issue in terms of a name mismatch. A new entity wouldn't have an issue with mistake number 4, but if any of your clients have a business that have been open for a period of time, making sure that the business shows that it's in good standing with the Secretary of State is essential. That's number 4. All right, we're halfway there. We have 10 mistakes. We're on number 5. EIN, sometimes called TIN, tax identification number. So it doesn't matter if we have employees or not. We should have a business address. We should have a good unique commercial business address. We should have an entity. We should also have a federal tax ID number. And so just like people have social security numbers, businesses should have an EIN number. We're going to need that to open the business bank account and build your business credit profile, which we're going to be talking about in just a moment. So we want to make sure that everyone has the right information on your business, including the right tax identification number. Seems kind of obvious, but we sometimes see that this is an issue. So obviously what we want to do is position the business to be strong enough that we can pursue funding under the EIN versus under the owner's social security number. So that's what you see us doing, is positioning the business to be credible and strong so we can get business funding. Mistake number 6, business credit reporting agency profiles. We often see loan approvals being denied because the business has not been set up with the business credit reporting agencies. So as you probably know, there's consumer reporting agencies like Experian, TransUnion, and Equifax. But separate from that, there's business credit agencies, mainly Experian Business, Equifax Business, and Dun & Bradstreet. So we want to make sure that the business is set up and has a good profile with Dun & Bradstreet, for example. Because in many cases, you'll get declined if the business isn't set up with a good profile and if we don't have established business credit. So you might say, oh, well, Tom, you were saying that a new business is fine. It is, and we can establish business credit very, very quickly. I think you all know we work with a nonprofit microlender that will add a primary trade line, $100,000 primary trade line under your EIN. That has an exponential benefit of showing that your business is creditworthy and ready for funding. That alone can bring your business credit score from, let's take Experian, for example, a starting point of about a 27 on a 0 to 100 scale and shoot it up to an 80 plus. So we need to be listed with the business credit reporting agencies. And we, of course, can help you do that. That's part of what we do with the startup package. Now, similar to that, let's take it one step further. Let's get over to mistake number 7. So now we have the business set up, for instance, with Dun & Bradstreet and Experian Business. But what if our credit score, our business, not personal, what if our business credit score is not strong? Well, we need to make sure that they are. And that is typically defined as at least an 80 score, as I mentioned a moment ago. Scores go from 0 to 100. Now, these different business credit bureaus operate differently. So, for example, a business that has not attempted to establish itself with business credit on Dun & Bradstreet will have no score. No score. We'll have to add normally 4 trade lines to create a positive score with D&B, Dun & Bradstreet. Experian Business, which we report directly to, was working on that last night. We directly report onto Experian Business. Went through all the underwriting and criteria. Every month we upload and provide our clients reporting to Experian Business. But Experian Business is different, where Dun & Bradstreet gives you no score until you have 4 trade lines, FOUR, 4 trade lines. Experian Business will start you with a failing score, usually around 27 or 28. It's weird they'd give you a bad score even though you've done nothing wrong, but we can quickly bring that Experian Business score from, as I mentioned a moment ago, from the 20s to the 80s very, very quickly, typically within a month. So that's what we want to do, is we want the business to have strong business credit profile because we're trying to get business funding, right? That's our goal. So as I mentioned, D&B has what's called PAYDEX scores on a 0 to 100 basis. Experian Business has an IntelliScore also on a 0 to 100 basis. But the bottom line is we can continue to build and strengthen the business credit profile beyond that 80, but we certainly do want to get the scores up to at least an 80 so they look credible. Why? Because we're trying to get funding for the business. So it sure would help if the business looked credible. Again, no worries. We do that for free for clients that are in the Startup Business Funding Package. All right, 10 mistakes, and we're on mistake number 8. We're on the downhill stretch now, aren't we? Lack of credible financial statements. Every business, even startups, even those that have just opened up, should be able to produce key financial statements, such as a balance sheet. We had a recent training on this. We talked about this. We trained on this. Yes, brand new startup should be able to produce a balance sheet. Yes. Income statements, also called profit and loss. So we cannot allow ourselves to think, oh, I have a new business, thus business reports or financial statements don't apply to me. That's foolishness. That's financial illiteracy, because there are some very legal and effective and rapid ways to have strong financials, and that's what we're going to do. And we can even inject cash flow into the business to make sure that it not only has good credit standards, but also shows solvency and liquidity. So, of course, we can help with that for free. All right, mistake number 9. We're almost done. So mistake number 9 comes to the topic of collateral. So when while accessing business credit does not take into consideration collateral, most business loans will look for collateral. What does that mean? Those are the assets that we're pledging in case of default. It protects the lender in case we don't pay them back. Certainly true that different lenders and different types of funding have different collateral requirements. But yes, this is relevant even for startups. So even if you and I, we form a new business today, there's no reason that we can't load it up with collateral by tomorrow. So we have to get away from this mistake, this fallacy of thinking, oh, it's a new business, these things don't apply. They do apply. As we talked about on the very first or second slide of the deck today, the credibility of the business matters. And of course, in green here, we'll provide assets. That's one of the things that our grant does. We literally provide free assets, free collateral to put on the client's financials so they have collateral immediately. All right, so we made it to mistake number 10. We don't want to overlook alternative sources of financing. When clients come to us, sometimes they have this preconceived notion of the funding that they want, and that's fine, and we can work towards that goal, but that may or may not be what they're best suited for. So ideally, what we would do is gather data and then figure out the funding plan that's best suited for the individual client, because there are different types of funding, including some from non-bank lenders. As I mentioned earlier, the Chapman Fund's an example. They are not a bank. They're not a credit union. But do they provide money to start or grow a business? They absolutely do, up to $250,000. That can be used for fixed assets, new construction, renovations, leased property, equipment, inventory, working capital. Now, some people will say, well, that's bullshit. $250,000 is not enough for me. Well, we can use that as the first tranche. That doesn't have to be the total capital raise. That could just simply be the first tranche. So, of course, through our model, what we're doing is literally setting up businesses so they have the geographical qualification for the Chapman Fund. So in summary, what we'd love to do is help you create a business that's credible on paper to access the capital that you need. Our grant subsidized startup business funding package, it's very, very straightforward. What do? We're going to provide a free, unique commercial address. That's important. Remember, mistake number 1. So we're going to be able to provide that to eliminate that mistake. The grant covers the filing with the Secretary of State, so the customer doesn't have to pay for it. Help getting the EIN, getting the bank account, getting that all set up, building up the business credit profile, providing assets immediately for free to put into the business so the business has collateral from day one. Providing access to the Opportunity Fund to get those daily deposits in to make sure the business looks solvent. And as we mentioned a couple times, geographic access to the Chapman Fund. So that's our 10 mistake presentation. And of course, if you were giving this, you would change the contact information here. Now, this is how you can reach us. And if you need a copy of the editable PowerPoint, email us and we can get it to you. But I'm looking for your feedback. And we've got 417 of you on this morning. So I'm looking for feedback. What are your thoughts about how you could use this message to go improve financial literacy of others, create new clients. And then, of course, we've already talked about the clients that you have, you're having them fill out that one-page app that you're sending into the funding coordinator for first tranche financing. Well, the top portion of that gives you a great snapshot, a qualification tool, if you will, of where is the business, and lets you know if they might need the startup business funding package. If they do need the startup business funding package, that's great. We can provide this assortment of services, and then they pay you $1,250 for helping the client set up. So, I mean, it's not get rich quick, but if you could help clients resolve these credibility issues and put an extra $1,250 in your pocket, that's not bad, right? So I'm looking for your feedback. What are your comments on how you'd like to use this? Lon says this will work great with his community-free clinics. Agreed. Great for community outreach. We love when we're out teaching in person, but we do realize in some cases that may not be possible, so you need to do it online. Ron says this information is really good, and using the one-page app, it's a great way to start off the funding for our clients and give us a better understanding. That's right. So you're already gathering the data set from your clients that are enrolled in credit and funding, like Ron's saying, because you're getting that top half of the app and it tells you, do they need this or not? Now, do clients have to do this? Of course not. Of course not. But these are real credibility factors that if they want business funding, you as the branch want to help them resolve so they become more fundable as a business. They could use the startup package or not. It doesn't matter to us. We don't make any money off of this. This is a resource to help clients become fundable. So if you want to use this resource, you can plug clients in and you make $1,250. If you don't want to use this resource, don't. It doesn't matter to me, but it doesn't make the information that we just said non-applicable. We need to help clients become credible if they want business funding. And this is almost a checklist, right? You could almost go through this as a checklist with your clients. All right, let's see. Kim asks, yeah, so there is a $2,500 fee for the startup business funding package. That's obviously a subsidized cost because the grant's covering most of the cost. So there is a $2,500 fee for a client to go through this package. It's a great deal, and you're getting half of that. So if you wanted to make it cheaper for the client, you could. You can reduce it by as much as $1,250, right? Because that's your half. So we need at least $1,250 to cover our hard cost, but everything above that, up to the 2,500 point, is your profit. So feel free to be flexible on your pricing. Brenda says fundamental information. I would agree. Trevor's asking about the opportunity fund, and that's good. Yes. So when we talk about the 3 C's, the truth is the 3 C's matter on the business side as well, but it's different. It's a different entity, right? The 3 C's for the business owner is about them as a person. The 3 C's for the business is about the business. So does the business have credit worthiness? Obviously, we're going to build that through Dun & Bradstreet and Experian Business. Does the business have collateral? Yes, we're going to provide collateral for free. We've talked about that. Does the business have capacity to repay? Does it have cash flow? Absolutely, and that's what Trevor is asking about. So if the business is not cash flowing, we can plug them into what we call the opportunity fund and start dripping in daily deposits. And that's obviously instrumental because that allows the client to be able to qualify for funding. All right, let's see. I think those are all the questions, and I know I'm running a bit long, so let me just summarize and then we'll end. So what we've done today is we've gone through a financial literacy tool that's available to you as a branch. So as long as you're a branch owner and you're in good standing, you can just contact us. You see our email here, and we'll send you the editable version, the PowerPoint version of this. Then you can take this and edit with your information, obviously, and then you can use it. You could use it on a one-on-one basis. You could use it on a group basis. You could use it through live education, through on-demand, recorded information. It's up to you. But the beauty is this is valuable information. It's not a sales pitch. It's telling people what are the 10 things that you really need to know if your goal is to get business funded. And then it also does clarify, hey, there's a resource available, a grant subsidized resource that they could plug into. It just so happens that that grant subsidized resource puts $1,250 in your pocket. So if the client's already in credit and funding, then you're already recognizing revenue there. This is an extra $1,250 for you. Many of you, not all, but the average branch is enrolling one client a day, so 30 a month. Well, out of those 30, how many do you think have credibility issues with their business setup? I mean, it depends on how you're marketing and who you're marketing to, but let's just say half of them do. So that's 15. So if you were able to help 15 new clients each month with this, that's going to put, well, just round it off, about $15,000 more into your branch each month. And I know that's not a big deal. Many of you are very, very financially successful. But 15,000 times 12, that's an extra $180,000 a year. There's some people that don't make $180,000 a year with their full-time job, and you're making it by just using this add-on to help the half of your clients that need it. So it's certainly a good revenue stream for you, but that's not the motivating factor. All right, Lon asked about financing for that. So kind of, yes. I mean, we have the credit and funding program. And so if a client wants financing for this, they would enroll in the credit and funding program with your branch. And then, as you know, you get the 4 essential elements: the agreement, the payment, the PFS, and the soft pull, same as it's been. Then you work with your funding coordinator to get that one-page app, and then we can raise capital for them for whatever uses they want. We'll just call it working capital. So they could use that to pay themselves, to buy inventory, to do marketing, or to pay for the startup business funding package. So Lon's question was simple: is financing available? And the answer is yes, but indirectly. I mean, it's through the credit and funding program is how financing would be obtained. But if you as a branch want to help a client with this, it's crazy simple. You collect the $2,500 from them, you keep half, you send us half, and we roll forward. We don't even need a contract. This is so straightforward of what the value proposition is. We don't need, there's not a separate contract that the client needs to sign, because this is the value proposition. This is what we're promising to do. So it's very simple. So you'd collect the $2,500. Now, if you want to reduce that, we already said you could. So Lon might say, no, I don't want to sell it for $2,500. I want to sell it for $2,000. Or Trevor might say, I don't want to sell it for $2,000. I want to sell it for $1,500. Or you might have Brenda. Brenda might say she wants to give it away for free as a perk to her clients. I mean, it's up to you. But, you know, we need at least $1,250 on our side to cover our hard cost. Normally, it's a $2,500 program after the grant subsidy. Normally, you get half and we get half. But if you want to alter the pricing, you can. But they would pay your branch, and then you would send us our half, no less than $1,250. Thank you, Lon, for that question. Anyone else have questions? So Timothy's asking about getting the PowerPoint. Yes, just email us, and as long as your branch is in good standing, we obviously can support you and assist you. We can provide you this editable PowerPoint, and then you can use it as you would like. All right. Well, thanks, everyone. Pleasure to visit with you today. We'll see you back tomorrow morning. Bye-bye.